We gotta work on that.
Sorry.
Do you think Cannabis Hour would ever do something like that?
No.
I don't think so.
No, they wouldn't.
Always room for improvement, Spencer. All right, so you got my chart up right now. What you see right now is the Vanguard ETF for the S&P 500. Big shout out to Mare. I believe it's pronounced Mare because I think it's short for Mary. Maybe it's Mar. For emailing me some tips to improve the visibility of my charts for you guys. I actually saved this default as Mare. This is the Mare default. Hopefully you guys can see everything. Also, I added a watermark so you know what ticker and which increment I'm looking at. So you should be able to see VOO1D for 1 day. Let's first take a look at yesterday. We had a little bit of a sell-off, but it wasn't crazy. We just had a day where people sold some stocks that took some profit. Everyone, I think there was like I don't know what the line is from Star Wars when Alderaan explodes, and I think it's Obi-Wan that like picks it up through the Force. But I picked up, it was as if 100,000 traders crapped their pants at once. And I just heard it as one big massive crap sound. But guys, look, we've had many like this. This is what markets do. A correction is good. A correction gives us time to blow off steam and get stuff on sale. That's why we're keeping our stops tight, and we're focusing on things that have good, strong upward trends that are in good sectors, all right? Which leads me into our ETF thing. Let's go ahead and open up my little watch list of ETFs. This is where it gets kind of samey, guys. Okay, can I just point something out? Jason Rasnick is in chat right now. I just want to say hi, Jason. Thanks for being here. My understanding is that you have an OnlyFans account. All right. And is it me liking porn, like probably everyone on this chat right now, subscribing to your OnlyFans? Does that make me a bad guy? Does that make me a pervert? Or am I supporting my friend? All right, you guys decide. All right, so taking a look at these ETFs, some of these should look really familiar with you guys. Let's hopefully you can see that. Maybe I do one more zoom. I'll zoom for you one more time. Not sure how clear that is, but I'm going to throw up all of these ETFs so we can look at their percentage gains over periods of time. I want to look at over the past 365 days and then look at over just the year to date. So I've got ARKW, which is I'm an ARK guy, guys. I'm an ARK guy. So haters gonna hate, but I don't know why the hell you would. ARK is fantastic. The performance is incredible. Kathy Wood is leading a fantastic organization that is focusing on the right things. The FANG stocks have lifted the markets to monumental highs, but they are not bringing out disruptive innovation that looks like the future we expect to see 5 to 10 years from now. And it's looking like it's even shorter terms. That's why I expect a lot of growth. So I got ARKW here. I'm going to add PRNT. That's another ARK Invest. Where is this? Yeah. Another ARK Invest ETF. I'm going to add ARKG, which is another ARK. Focusing on genomics. So I love genomics because this is, I believe, the future of preventative medicine for some very serious illnesses that are based on your genetic predisposition to have those illnesses. So we're looking at gene editing and other gene-based palliative, preventative, and therapeutic measures. So I really love that. I think the age of chemical medicine is very antiquated. So we're looking back at a lot of medicines that were developed in the 60s that are just have been tested for various things that are coming to market and being branded as different shit these days. So I'm looking for the next phase there in technological advancement. ARKK, this is another disruptive technology ETF. I want to bring in ESPO, which I love. This is esports. This is a VanEck esports ETF. And I'm going to compare these ETFs to VU, which is, it's basically SPY, but it's the Vanguard version of the S&P 500, to QQQ, which is basically tech stocks. It's basically the NASDAQ ETF, and compare it to IWM, which is our small cap. All right. So we see a bunch of squiggly lines. We like squiggly lines here on technical, get technical. So let's look at our absolute top performer since the beginning of 2020. So the way I do that is I just bring 2020 right here. Absolute top performer to date is this light blue ARC-G. ARC-G. This is percentage growth. All right. Percentage growth. That's genomics, guys. Yes, if you guys are holding CRISPR, I think the other one is BN. What was it? It's like BNG, something like that. I know that's not the whole ticker. It's a 4-letter ticker. There are a few genomic based firms that have taken a hit lately, and you can see that in this ETF. I'm looking at this and I'm seeing buying opportunity. I love this thing. I'm long this thing. I want to see big growth over the next 5 years. This is the backbone of a well-diversified portfolio, in my opinion, because again, this isn't financial advice. This is purely for educational and entertainment purposes only, hopefully in equal measure. So that's ARC-G, killing it. Another one very interesting is this orange, which look. Right now, the killers over since the beginning of 2020 are going to be ARC-G, massive growth. We got our yellow, which is ARC-K, which is, I believe, is the flagship ETF fund from ARC. And then down below that, we've got purple, which that's your boy ESPO, which of course I like esports because I saw stay at home COVID as a big catalyst for folks really changing their lifestyle and new entrants to the gaming market coming in, as well as streaming things like competitive esports. So this is people that make games, people that make hardware, as well as people that facilitate the esports ecosystem, which is not going anywhere. If you compare, I don't know the actual figures, esports games absolutely eclipse earnings from the past century's most popular form of entertainment, Hollywood and movies. So we're seeing a big shift into this new decade here toward this interactive entertainment in this esports ETF. So let's go back and look at performance just since the beginning of the year. And we really start to see some explosive growth on PRNT, guys. PRNT. Do not underestimate the viability of this new form of manufacturing. This is not necessarily about you having a 3D printer in your house so you can remake the Boba Fett action figure that your mom threw away when she's cleaning your closet when you were a 12-year-old back in the 70s. This is about additive construction or additive manufacturing of parts for industries like cars, aerospace, architecture, buildings, that is not otherwise possible when you have a piece of a material and you're cutting away from it to create your object. We're talking about something where you can actually, instead of having a person using CAD or a 3D model designing something that they need, using AI to design something that a human can't even design. And I'm taking all of this directly from the research done by Kathy Wood and her colleagues over at ARK Invest, who are fantastic. I highly recommend checking them out for due diligence. They've done a lot of work for you. But using AI to develop crazy looking parts that you just would not be able to imagine, that are much more efficient and improve the performance of the final product, whether it's airplanes, spaceships, cars, you name it, things that are absolutely necessary and integral to our way of life. So we're seeing this massive growth in 3D printing. One poster child, of course, as you all know, is Triple D. No, I'm not talking about Dennis Dick. I'm talking about DDD, the 3D printing ETF. ETF. I believe that's about the third largest held asset in this fund. So guys, really, really, really. Okay, is Exxon? Yeah. Shout out to anyone that knows about the 3D printing space. I'm really just starting to learn a lot more about it. This is going to be a sector I'm very bullish on. This one and automation / AI, which the automation is going to go into the vehicles, and then the AI is going to go into a lot of different things, automating a lot of processes that are done by humans, including industrial design. So I'm really looking at that, but man, just look at that thing. ESPO still going to hold it. I mean, this year it's not the big winner compared to these other ones, but I mean, it's just an industry that's going to continue to grow. And if we look at it, let me go ahead and X out some of these except for the ESPO. And I mean, guys, and down here at the bottom, we've got the S&P right here is being defeated. It's this bright pink one. So I mean, we're beating the living hell out of the growth of the S&P 500. So I want to look at just ESPO. So we'll get rid of these. SPO. That is my very rudimentary trend line, because it's so hard. You really have to stretch this thing out to find the sort of lightning bolt zigzag that you like to see in a channel for the stock going up. This thing is just going and going and going and going. It's an absolute beast. We've got the COVID crisis here, but then you see how that just accelerated. It's like the V-shaped recovery never stopped for this thing. It did take a breather. I'm not really sure what catalyzed this in September. I'm not really sure what catalyzed that in September, but at any rate, I don't care. This was a point of entry. So this is me piling into this. Really, really loving this ETF. See nothing but upward potential. And this is the kind of thing where it's so parabolic right now. I'm going to do something I haven't done on the show yet, which is try to draw some type of channel on this to address the trend. So if we look at the trend since this period of consolidation, what I'm using right now is a Fibonacci channel tracing tool. All right. So the way that you do this is you find the first down point in a trend. You're always drawing when you're in an upward trend on the right side. Actually, in any case, when you're doing any sort of trend lines, you're always drawing on the right side of your price points. So here, I'm going to find a low point, and I'm going to draw my next spot on the next low point, right? And in this case, we can see, you guys can't really see what I'm pointing to, but like right here, I know this is messy, but bear with me. You can see that there was a dip here that if I'm doing just pure trend analysis, I would adjust this trend line. It's okay that you're supposed to do that. That means that there's a deceleration in the trend because this is about speed of growth, right? A lot of people call this first line, this gray line, the speed line. So when this happened, I'm going to adjust this second point to that second low, the second swing low, to adjust my speed line. We had a deceleration in the growth of the stock. And then what I'm going to do with this third point, so we got 3 points with this channel tool, is draw it on a point that is in between these first 2 points for a swing high. All right, so I could do this swing high, which I'm going to do because I think it's the most consistent. And what we saw is something really great. You want to see a healthy trend going between 100% and your zero line, which is your general speed line here. All right, this is a stock channeling up, looking great. We saw it break out past that up to the 161.8% line. That means that we're having a good chance of seeing an acceleration of trend. In fact, if our next trend low is higher up on these lines than this one that I've drawn, we're back into acceleration mode. So that's a way to look at this ETF growing. And anything that's in a channel like this, just remember, this is like Newton's law of an object in motion will stay in motion until another object of equal mass or force stops it. I took physics like 10 years ago. Bear with me. But the idea is that trends continue until something clearly stops them. So there's absolutely no reason for this to stop until we see it happen on the chart. So guys, the backbone of any if you're actually focused on growing wealth in your portfolio, it's not get rich quick little trades. You should have investments in long-term growth assets. All right, guys. I do want to take some would be better to talk about this. All right, let's do SNDL. So I got to be honest with you guys. SNDL moved a lot because it was a meme stock, in my opinion. Spencer, can you fact check me on that, or at least gut check me?
That's not a hot take. I think that's a pretty reasonable take.
All right, so you've got the meme stock potential. I'll be honest. I don't think there's anything wrong with people getting enthusiastic about a stock they like, it becoming popular, and as long as there's some good due diligence going around and folks agree on that, that's the case. However, this is a round and bottom, and we also had a gap to close, and we clearly closed that gap. So if I'm looking at this from a purely technical perspective, because you got to remember, guys, even if this is like a so-called meme stock, which I'm like kind of tired of fucking hearing about, to be honest with you, even if whatever, all of these external forces, remember, those go into what we see on the chart. The chart, if you believe in technical analysis, the chart reflects all of those external factors, no matter how much of it you might categorize them as a phenomenon or an act of God, or an extremely off-the-wall, unlikely event. It's reflected in the charts, and that's what we react to. So we did close this gap, and then if I wanted to look at my target, I would go to, whoops, I'm going drawing lines like crazy. Draw my line right here. I would do 2 just so I can see the gap. And yes, I know my lines are big and thick, but that's just so you guys can see them. So we're looking at sundial. But yeah, we see that gap got closed. In fact, we gapped up past it. So that's super bullish. Gaps up. This whole idea that gaps always get filled is bullshit. I'll tell you that right now. If anyone tells you gaps always get filled, they're wrong. Gaps often get filled if there's some type of pattern to reflect it. But if you got a strong trend going up, it's going to gap up, baby. And almost every single one of those gaps is a good indication of a run up. It's just when you start to get to the tippy top and momentum slows down and you get one final gap, it's something called an exhaustion gap, which means that your grandma probably just gave you a call and said, should I buy this cannabis stock? Time to get out. Grandma's going to hold the bag. All right. Someone's got to buy the last ones at the top. So when I look at this looks to me like a measured move from what looks like just about the bottom to where I'm going to draw this resistance. And then I'm going to add this on top of the resistance, and boom, there you go. So it looks like just about a measure move. We're going to hit resistance at this key point. This is obviously an important price level. Right about here, and that's what we've done. We stopped out. People didn't stop out, but people started selling at that point. Why? Because this is a key point. If you believe in this company, see if it trends up. Watch it on shorter time frames. Be very careful though, because again, this has behind it, putting it in context, there's a good chance that this thing will just shoot back down, because one of the 3 very important things that we care about on the show is volume. We've got a tremendous amount of sales volume, and another one of the 3 things we really care about on the show is RSI. This thing has become very overbought. When something's very overbought, people are going to start selling it, and it's going to go back down. So there you go. That's sundial, guys. All right, keep it clean, guys, with the gaps. All right, so that's the ETF list that I've got. I want to look at the contest list. I had some interesting ones in here. Yes, I was a little bit biased with the ones that I picked. Some of you gave me patterns that were just like when I asked you for a pattern, you just said something like upward momentum, which is fine. But what I want to get into with you guys is, let's start defining that momentum. Is it in a channel? Is it trading within a certain rate of acceleration? Can you identify that with a tool such as a GAN channel or a fib retracement? There are multiple channel tools. I'm just using Fib right now, but that's where I want to get with you guys. Something that I did want to point out with MP Materials Corp, is that, yeah, this is looking pretty good. It looks like it mostly resolved. Just be careful because we're at all-time highs. We are at all-time highs. This is looking like somewhat of a double bottom. And yeah, that can occur at following a big upward trend because we had a downward trend leading into this. It's not going to be as powerful as an actual reversal of a protracted downward trend, but this is a thing. There are two ways of looking at this. Most of what we talked about on the show is very conservative, which is this is our resistance line, which is where the meat of the action took place, and this line is not even straight. So typically when we're looking at these, we would like to draw our rectangle on it so you can really encompass the action here, the scene of the crime. So it's something kind of like that. Get the absolute bottom, and then I'm gonna try to do a yeah. That's what we want. Yeah, so we want to capture the meat, which this makes it really easy because these tops kind of coincide with these tops. So we've got the meat here. Do I have another indicator on? I don't know about. Okay, we're good. And then we go from the lowest point, right about here, up to the highest point. And then we add that to our breakout point. And we set our target. So it looks like this is very possible for us to do. But bear in mind, everything is in context, guys. Everything's in context of what has happened in the past. This is all about using historic price action to try to predict what will happen next. We've got this level right here. I'm going to just draw a quick little dotted line there. That is going to be resistance. We're going to hit resistance right there before we can hit the full measured move from this double bottom. So that's MP. Shout out to whoever put that in here. Love all the talk about, oh, you do love MP materials? I mean, you must. I mean, look, if you got in down here, you're probably having a great time. I hope you made a responsible purchase with your earnings. But yeah, just watch all-time highs because there is a chance, guys, that this thing reverses. And you hear the sound of 10,000 day traders crapping their pants at once. So paintbrush tool. I can't find else to use an arrow tool. There's a chance it does this. All right. And then it will probably retest this support. Right. So it would be more like this. Right. So watch it. Keep your eye on it. There's no certainty that it will get to this full measure move. But if it breaks out, never bet against breaking through to all-time highs. Nothing wrong with piling in a bit as long as you're keeping your stop losses tight. Watch these things. Watch them at the close in particular. Don't want to get stopped out. We also don't want to have some bad emotions, some negative emotions because we're down on our account. All right, we want to limit those bad feels. Next up, InspireMed Inc. This is ticker NSPR. This is from the contest. This one, I forgot what the person said it was, but what I see here is an ascending triangle. If you put in NSPR into the contest, go ahead and give me a comment in the chat so I can give you a shout out. I like this. I like this stock. What I will say is that it's in that range of $1.38 where it might be bullshit. Brian is asking, Neal, is there a certain percent you like to use for a tight stop loss? My general rule of thumb is 5 to 8%, depending on what's been historically going on with the stock. So when we're looking at swing highs and swing lows, that should help you gauge what a reasonable stop loss is, because a lot of times what happens is after market on something that has a clear pattern, like we saw with MVIS, something that has a clear pattern, you might get shaked out by a move that just goes to 9% or something like that, and then goes up 50% in aftermarket hours. So trailing stop loss, be careful with. Be mindful of key levels, which we can talk about. So I say, like, when I'm not thinking about it, I'm just throwing in a quick, like, kind of YOLO trade, somewhere between 5 and 8%, often trailing or a fixed stop. But your best bet is to do that based on key levels of support. So that's my answer to that. I mean, the best answer to, like, pretty much any of these questions is always going to be, it depends. It depends on the situation. So yeah, looking at this thing, we're testing what is, yep, all-time highs. We'll go ahead and use the wick here. We see we broke out a little bit, very bullish, but we're struggling to stay up on that, right? We're fighting. We've gotten past this prior all-time high on the wick, but the body here at 9:55 a.m. Eastern time is struggling to stay up on that. I'm looking at an hourly chart. Let me switch to a day on this. I gave it a thumbs up earlier. Yeah, we got to look at smaller increments. Yeah, you get essentially the same thing at the 4 hour, but we'll go down a bit smaller. 2 hour. The body's struggling to stay up there, and actually it's at this other resistance level, right? So I want to see it approach that. I want to see the body of that candle approach that resistance line and break through for something real. So right here, I'm just finishing the drawing of the ascending triangle so I can have an apex. I can see my sloping support. I can see my upper resistance. One to watch though, but also one to be very careful with on, guys. This thing is $1.44, medical device company. One thing I can tell you about medical devices, big time target for lawsuits. Big time target for lawsuits. Just look at the history of Da Vinci medical devices. Da Vinci medical devices. It is robotic surgery, like a surgery robot that is controlled by a surgeon. Lots of lawsuits. All right. Doesn't mean that they don't make great products and they're not in, like, basically every OR across the country, operating room. And surgeons love them. I've recently spoken to a surgeon that is very enthusiastic about it, but there are lawsuits there, and that's all it takes to crush a company like this. I mean, this thing could get wiped off the face of the earth at this level. So yeah, no, pimping ain't easy. Pimping ain't easy. Hustle and flow. All right, this was another one from you guys. SBE, and I'm already running short on time. I need a bigger time slot. This one, here's what I got to say about this bullish pennant. We're just about at the point where we're 75% through the pennant to the apex. And this is where, if it gets past this and it really starts approaching where these two lines converge, it's very unlikely it'll break out. It's most likely to break out. It should have broken out ideally after this swing low. So we had our kissing our resistance one time, 2 time, 3 time, and it should have broken out there to be more reliable. But because this is going so far into our pennant, it's less likely, is all I'll say about that. But if it happens, use your measured move, which would be your conservative measurements here, your conservative price target, swing high plus a swing low, and add it to that breakout level. So wherever you see it close above the upper resistance line, that's where you're going to set that. So shout out to whoever gave me. Give the guy more time. All right, Steven, we'll give it some more time. It's on my watch list. I'm just not entering. So FRSX. Look at me with the drawings. I like FRSX because I think that it's beginning a new trend, and it's got a nice. The 2 hour is not good for this. It's got a nice comeback story. Okay, so it looked like it IPO'd at. It probably IPO'd at what, like $10.83, something like that. Actually, I'm not sure if you can see the actual IPO valuation versus what it started trading at on the day of. But the whole thing is just a big return to its previous high at its IPO price. So if we're drawing a line across here, a big thick one, because these things aren't perfect, we've got a couple things going on. One is that return to all-time highs. Number two is some serious momentum coming through. And you can do this, guys. When you see this momentum, feel free to track the trend and momentum with a line. That's very helpful. And we see that coming in. We see the big volume at these key points that are creating pulls that are followed by consolidation and then some trends up. This one's a little bit tough. Let me get down to 2 hour here. This one's a tough to really see clear swing highs and swing lows in a pattern. It's a little bit chaotic, but a good argument can be made that this will resolve. So if this would be your little rounding bottom potential. Yes, you can see that in upward trends. And then we could shoot for something. Remember, we're hitting resistance at all-time highs. So this is if it breaks through with power. This is like a battering ram. Once it finally breaks through the gates of Mordor, you got people coming through, or perhaps Helm's Deep, and it's followed by thousands of orcs. And that's what you get there with a price target of about 14. Something I want to point out, though, is that it has reestablished an upward trend. So let's just go ahead and go back, because I don't think that we have. Hey, Spencer, can you make sure that Voz has the link to get in?
She does. She did say she's cutting it close at 10, so she may be here in a minute or two.
Cool.
She does have the link.
Okay, cool. That gives me more time. So I'm gonna do the channel thing again, guys. Let's look at this trend. Let's draw it out, start to finish. I'll get rid of my stupid thumbs up. Get rid of this line. We're gonna use a Fibonacci channel tool, and I'm going to start with our swing low. Go to our second swing low, and this first line is our speed line. You can see how it kind of lines up with this other swing low here. And then I'm going to bring this to a swing high within our channel. I'm actually going to use this one. It's a more clear swing high because I think that this is a swing low going down. And what we've got actually going back to the OG breakout from this long trading sideways period is we're touching that 100 level. So again, folks, we're going in between 0 and 100, 0. And then if this thing has a hard time getting up to 100, something to point out is that the trend is probably going to change and probably slow down. So this is something to be mindful for anyone that liked FRSX. Be mindful. This is potentially a decelerating trend. So there are two things that are going to happen. Number one, where's my paintbrush, dude? Number one is if we can't hit 100 again and we hit one of these lower levels like 78 or 61, and then it starts to go back down. So our swing high is then not as large as our previous ones, and then it passes through the 0. That's when we start to look at a dying trend. We start to see a dying trend. So be mindful of that. All right, so we're getting rid of that. Let's look at BNGO. This is what I was thinking about earlier. Genomics. Let me know in chat. I'm not sure if I know those people, Mick. I'm not sure if I know them. All right, guys. So this one I like. I already drew on it. I'll get rid of the fib because I think it's messy. But I'll leave the obvious stuff on, which is what the hell am I doing? Am I drawing little dots? I'll leave the fib. I'm a mess here, guys. I'll leave these lines on here because you all know them, guys. What's this pattern? Let me know in chat if you know this pattern. This thing should be like the equivalent of if you went to elementary school in the United States and maybe other English-speaking countries, I before E except after C. That's basically it. So guys, this is there we go. It's a pennant because it's a wedge shaped, right? We have it's symmetrical on the triangle. It's a bull pennant. It's not sloping in either direction. So great, very reliable. This is bread and butter stuff. We love this crap. I'm saying crap a lot on the show. So we love bull pennants. We've got a great upward trend here following like an insane period of sideways trading. We go to the day. We see this might be another comeback story, right? We've already actually broken out of what is like just a huge rounded bottom here, the shitty downtrend, and then I think a nice rounded bottom would have started here. And then you saw that it actually broke past this level and gapped up, right? So the bulls have come in. Look at the RSI spike. Insane. So looking at this, we want to see, once again, we want to see this break out before this goes sideways for too long. We want to see this. So we've already had our 3 touches on the upper resistance, and we want to see this thing break out here. And if it does, we've got our measured move from the swing high to the swing low added to our breakout point, which, you know, you can reasonably place it right about here for a potential gain of about 35%. Nothing to shake a stick at. I just want to do one more ticker before we bring on our guest of the day, the Voz. INFN. I didn't know about this ticker. If you guys put this in the sheet, give me a shout out if this was you, because this one is very nice. This one, you did identify it as a cup and handle. That's what it looks like to me. How is it a cup and handle? Well, number one, what we look for is a trend. And in this case, is a downward trend. And then what we want to see after a downward trend is some type of reversal pattern, one of which is a cup and handle. And I think you have found one, my friend. So we can see that this period of consolidation is a key level. So I've drawn my line there, and I'm going to go ahead and draw it past this other period of consolidation to show that we did have what you want to see in a cup and handle, which is a rounding bottom followed by a little downward before you're up. Sometimes it's more sideways consolidation. Both are cup and handles, all right? At any rate, you do have on your hands the formation of a cup and handle pattern. It has not broken out yet. It's doing what we often see, which is sometimes break out a little bit above, come back down for some form of bounce. This is forming the handle portion. So we are watching for a breakout above this area of resistance. So let me make these candles a little bit taller so we can really get in here. Yeah, I think you can reasonably draw this even a little bit lower if you want. Like this thing is starting to break out past this period of consolidation. So roughly speaking, folks, because this is choppy and charts aren't perfect, they exist in the natural world, roughly speaking, I'm going to add the depth of the base to our resistance level and shoot for a $17 price target. $17.25 if you want to get really exact, but I wouldn't recommend it in this case. Looking for 72% gain over time. Definitely watch that for something that we've seen already, guys. Sometimes it just goes like this. If it's MVIS, microvision, it goes like that. And so you guys are welcome for that. Also, give me a 1 in chat if you guys got into MVIS, microvision. We called it out a couple times on the show. But what I would expect is a nice trend to form. A little more realistic, right? All right, guys, that is it for tickers from the contest. I just want to remind everyone that we've got the boot camp coming up, so make sure that you sign up at benzingabootcamp.com to learn about options and SPACs. 2 really, really hot topics that we get asked about a lot. So that's why we're doing a full day of education on a Saturday. And with that, I am very happy to welcome to the show Olivia Voz, which is short for a longer last name, aka The Voz, or aka just Voz.
Hey guys, what's going on?
Oh, not too much. Just looking at charts and stuff. What's going on with you?
Sounds like a plan to me.
Good, and that's why we wanted to have you on. I want to say I like a segment that you do And let me first ask, during this interview, would you like to go by Voz or Olivia?
Voz.
Okay, yeah, good
Of
choice.
course.
It's much cooler. So Voz. A segment that I really like is Technical Tuesday.
Ooh, thank you. It's one of my favorites.
It's very cool. Could you tell folks a little bit about let us know what you do. Tell us about this sort of media empire that you're getting started, and how you look at technical analysis.
Well, first of all, it's really nice to be on the show. Thanks for having me, guys. And it's nice to meet your viewers. And I hope some of my own Twitter friends jumped on as well. I'm the Voz, and I started off doing interviews with the traders at the New York Stock Exchange. And then I kind of just got obsessed with technicals. And I really, just like delved into it and started making my own like signature trades and stuff. So it's actually been pretty fun, and I love interacting with viewers, taking their requests and checking out what charts they want me to look at and stocks.
Perfect. So guys, make sure. Hey, Spencer, make sure you drop Voz's social and stuff in there so the folks that don't know about her follow her. Because frankly, guys, you're gonna get some trade ideas from her. So,
hell yeah.
Hell yeah.
So I'm not a Mickey Mouse over here, guys. I'm not gonna just put like booty pictures on a yacht and say I'm a Forex trader. Like, I have the goods.
Yeah. We don't do that either, but guys, seriously, if you'll pay for it, you will get from me booty pictures on a yacht. So
yeah, definitely.
Give me a 1 in chat if you want that.
Benzinga gone wild.
Benzingagonewild.com. Gonewild.benzinga.com.
Yes.
So Olivia, what tickers are you looking at right now?
So right now I'm going to walk you guys through 2 of my favorite signature trades. And I just want to make sure I share this correctly.
Yeah, it's a lot like Zoom. So if you go to the bottom, there's a share button. I'm going to stop my share.
Okay.
And then you should be able to click the share button, and it's just like Zoom where you can click like the specific tab that you have your charting tool in if you want to.
All right, here we go.
We should be able to figure it out from there.
Okay. All right. Am I sharing? Did I do this?
No.
No.
Not
Sorry,
yet.
guys. All right, let's try this again. All right, I don't need tips. Okay, here we go. Share. Chrome has lost position. Oh, I have to give it permission. Hang on.
Okay, no problem. While you're doing that, I'm going to do some shameless self-promotion.
Yes, go ahead.
Hey,
and
guys.
The picks that we've been talking about.
Yep. All right. So guys, I just want to say this show wouldn't be possible if it weren't for instant coffee, brandless instant coffee. If you know what coffee brand this is, go ahead and at them on Twitter, at Neal's tweets, at Benzinga, and say, sponsor Get Technical. What are you doing? Something along those lines. Apply a little bit of pressure, guys. Do us a favor. Another thing I want to bring up, every morning I drink my instant coffee out of this News That Moves mug with Benzinga Pro branding on the side, which is available at swag.benzinga.com.
Oh, man. What a day already.
Okay, so we're off to a fantastic...
We really are, guys. Like, I am... All right, let's try this. Oh, my God, I think it's working.
It is working. Adding to stream. We've got a chart. Look at that.
Holy Vishna. All right, here we go. All right, guys, I'm back. So, are you done with your shameless plug?
Yeah, I think I'm mostly done.
Okay.
I'm done for now. Thanks.
All right, guys. So I'm going to first show you one of my favorite signature trades. This is called a top shelf trade, okay, or a top shelf chart. I call it top shelf because essentially you're finding a pretty strong shelf where you have limited risk to get in. And it's basically the confluence of some of my favorite indicators. And I call it top shelf because, pass the Cavossier, right? So that's why I have a little martini glass here. And what we found is recently a top shelf in CarMax. Like, of all things, CarMax, right? I mean, people were kind of like trolling the stock. It is a used car dealer stock. But what I liked about it is this confluence, like you see, like it's like grinding right here. Price is grinding here, and we have the moving averages, like the 200-day, the 50, and the 21-day moving average. But what I use especially that you guys aren't seeing right now, there is another shelf, or there's another indicator that's creating this confluence right now. And you guys can't see it until I go like this. Here we go. Let's zoom in a little bit. Right here. Do you see that? Am I talking to you, Neal? Do you hear me? Or am I just by myself? Okay. So guys, what I just clicked on is called the point of control. This is a volume profile. Are you familiar with it?
I was going to ask you about it. I'm somewhat familiar with it. I don't use it, but yeah, I love that you're about to explain it. So please do.
Yeah. So check this out. So right now, just if you guys just missed that, if you're tuning in right now, Top Shelf Trades, it's a confluence of my favorite indicators. We're talking the 200-day moving average, your favorite moving averages, whatever you use. But the most important part about a top shelf is I like to see this guy, this magical little thing called volume profile. And so volume profile is basically showing what price was the most popular. That's what this is. It's almost like volume bars displaying price. So we're ignoring down here the time frame, right? What time had the most volume. And instead, volume profile shows what price had the most volume. And that's like where the bulls and the bears are really fighting. It's like basic auction theory of the stock market. And what it has is this thing called the point of control, which is the most popular price. And when you have something like this, let's see, that's the largest volume bar right here with the price volume bar. And when you have this with the moving averages, grinding, you have price like grinding up on this, like you're at the club with your moving averages and the point of control, which is the strongest point right here, that's going to create a really nice shelf. And usually, more than not, price will react really nice off of this and rally. And if it doesn't, you have your stops like right on the bottom here. So the risk reward is pretty good here. So CarMax, we had a really nice top shelf trade in CarMax. The thing went from 95 to now 126. Pretty cool. Another one that I saw a top shelf trade in, let me just get rid of this magic because I like drawing it, is Farfetch. Farfetch around up here, it had the point of control up here. If you zoom in a little bit, I personally like you'll see like the point of control or like this volume bar right here. If you zoom out at least 6 months, like bam, right there. Sometimes you need to zoom in a little bit to like justify if there is strong, price buying right here, which we saw in Top Shelf, which we saw in Farfetch. But another indicator, it's not just the moving averages. I also like doing Fib. Fib can create a beautiful top shelf. Whoa, that's the pitchfork. Who uses pitchfork, man? I thought that thing went out with Truman. All right, Fib retracement. Here we go. So around where I caught this top shelf was, I think it was around here. So we had the 23% Fib. We also had the point of control right up here. And in Farfetch, this thing went crazy. I don't know if you guys are following Farfetch, but it's a pretty cool luxury, like overseas online stock or company. So you can get, your Italian sewn tidy whities sent right to your door. Because I know you like those, Neal.
You got me. I do like them.
So what do you think so far? Pretty cool stuff, right?
I think everyone is really liking this. This is fantastic. You're the first person on the show. I got to say, you're the first person on this show to use volume profile and explain how it fits. Also, you're the first person on the show to pull in the Fibonacci retracements, which I really appreciate. Because yes, you are. I mean, we are a fairly new show, in all fairness. But you're introducing some new concepts with a pick. That I don't think we've talked about at all. So
just a reminder for Fibonacci, guys, it's basically, you just pull it from the low to high or high to low. That's how I do that. So you take the low to high at this point when I caught this top shelf, the lowest price to the highest price. That's how you measure it, right? And that's where I found this top shelf trade. But I have one more trade I'd like to show you guys if we're on time or no, not on time.
Yeah, you can absolutely keep going. And really quick, just so I'm going to zoom in on this really quick.
Sure.
What's the ticker on the one you're looking at right now?
This is Farfetch FTCH.
FTCH. All right.
Yeah.
Producer / coach Spencer, make sure we get that up. There we go. Beautiful. All right. Yeah. Go on to your next one, Voz.
Yep. And, I'm just showing you examples of when you catch something like this, what can happen, right? And we have some new ones that we're watching or that I'm watching. I love how I say we, because, you, me, followers, listen, we're all in this together. So I love when my viewers are like, yo, Voz, I caught a top shelf. Like, tweet me out. Sharing is caring.
tweet me out too.
Tweet me out. Tweet us all out. How much time do we have?
I'll give you like 5 more minutes. How about that?
5 more minutes? Okay. Yeah. So I want to show you an example of what happens. Sometimes a top shelf, we saw this in ACAM, Akamoose, right? This thing, it has not, it's so much fun to trade, especially for an options trader, because the thing has just been crazy range bounds, these wild swings of being range bound in the past, let's see, since Julio, since July. But we caught a nice top shelf right around late November. And sometimes, of course, it can overshoot a little bit. Always have your stops. I'll overshoot it a little bit because I know that this can happen. But what happened after this top shelf is it rallied. We had ACAM rally from 102 to 125. Of course, people are going to take their profits at this point. I took mine a little earlier. But see what happens? I call it a shelf because look what it's catching right now. Again, after its sell-off, it reported earnings. No one liked it. Even though it flew through these moving averages, at this point they were moving higher, it still catches this point of control on the volume profile. So that's why I like to call it a shelf, and we'll see if it can, test this for a couple more days and then if it can rally again. But at this point, I wouldn't trade this, but I just want to show you that it can catch that shelf again.
So I want to jump in and ask what I think is somewhat of an obvious question. So I think volume profile is kind of coming into popularity right now. I see a lot more folks talking about it. So there are a lot of open questions. I know that there are key levels, right? There are key points in the volume profile that are very important.
Oh, yes.
Would you mind, just purely for the purpose of educating us, telling us what those levels are and showing them to us on this particular stock?
Of course, absolutely. So the volume profile, again, guys, this is where price was the most popular, right? We're ignoring time and we're looking at what price had the most action, okay? So the Mac Daddy of the volume profile is the point of control. That is where the most action was happening on that price, okay? And that's what this dashed line is, all right? This is the value zone, this bright area. This is where 70% of the volume has been traded. So that's another key thing that you want to know when you're looking at volume profile. And essentially, the top of this value zone is resistance and the bottom is support. That's kind of how you can look at it.
So coming from a statistics perspective, I look at this as a bell curve distribution.
Yes, and they take different shapes, which is really cool. So this is a bell curve, but they take different shapes, and I have my little tricks on how to trade those shapes. So, we can go into that another time.
I hope that we can. We've got about 2 minutes left. Is there anything that you would like to leave folks with? What is something that will astound and imprint in the memory of chat? The Voz.
Boss trades, okay? Boss. You trade it like a boss, baby. So we went from our top shelf to now the boss. So we're actually going to look at time now, okay? Time. Boss trades, it's all about time and volume, whether it's good volume or bad volume, okay? We need volume accumulation to push a stock higher, which we saw with UTS, okay? Look how clean this is. So basically, guys, what you want to look for in a boss trade is you want volume accumulation to push price higher. And then you want a low volume. You can call this a bull flag. You can call this a sell-off, a consolidation, but you can see the volume here, and then the lower volume, sell-offs or consolidation, then we have another push higher, lower volume sell-off or accumulation, a high volume push higher. I mean, this is so bullishly symmetrical. This is like, I don't even know. This is like the Stacy of stocks. And of all of them, UTS, I mean, they went into tortilla chips, and the crowd went wild. But the algos haven't attacked this thing yet, so it is still valid. And we're looking at a low volume, consolidation right here. This is where you kind of would want to get in now in UTS and wait for that high volume, accumulation to take it higher. So this is a really good stock to end with because it is in that lower volume pullback, it looks like. To get in.
I love your approach to trading so much right now, Voz. We have not had this vibe on the show. I got to say, we must have this again.
Awesome.
This is boss. This is the boss trading strategy. This is a boss trade coming from the Voz. Guys, give me a 1 in chat if you want to have Voz back on very, very soon. Voz, I want to give you the opportunity to do 2 things. 1, tell me your favorite ticker right now. And then 2, let folks know where they can get more of you.
Okay, I just ended with my favorite ticker, UTS, and I'll give you guys another one. For those of you that like gentlemen's clubs and stocks, RICK, R-I-C-K, is a great boss trade that, you guys can follow me on Twitter, the Voz for real. And I'll tweet that chart out today so you could see what I'm talking about, how that's another boss trade.
Very, very cool. I'll have to tell a friend of mine about this RICK stock. It's very, very good.
I don't know if they have like virtual strip clubs or what's going on, but apparently this has been doing very well in the pandemic. So
yeah, I want to be able to tell you. All right, thank you so much, Voz. It's been fantastic having you on, and hopefully we get to see you soon.
Yeah, thanks for having me on, guys. See you later.
All right, guys, that was the Voz. Make sure you follow her on Twitter. She's fantastic. That was my first boss trade experience. A couple of you guys pointed out that her background was that sort of pinkish hue matches what she's drawing on her charts. That's a pro. She is 100% doing this all the way. She's fantastic. I guess I don't have enough good things to say about her. So hopefully we have more fantastic guests like that. And a lot of you guys gave us a 1, so we'll have the Voz on again as long as she can make herself available for that. Guys, we've got 3 minutes left. I think at this point I would really love it if Coach Spencer could play sad music in the background as we wind down. The credits start to roll. It would be like Neal. And then it would say the Voz, aka Olivia Voz. And then
all right, so I'm making a note now. Get sad music, right?
Yep.
All right.
Thank you.
Get sad music. Got it.
Yep. I appreciate that, Coach Spencer. One final reminder about the Benzinga Bootcamp, benzingabootcamp.com. I'll be there. Hot Stocks Lucha Kobe will be there. A whole bunch of fantastic educators will be there to teach you about options and SPACs, as well as just regular trading stuff. Let me know. Tweet at me at Neal's tweets. Spencer, can you throw that up? Tweet at me at Neal's tweets if you liked diversifying away from just charts and talking about ETFs and stuff like that, if that was helpful. Also, just tweet at me and let me know what your favorite things to learn about are, because I got to be honest with you guys. I can't do this every day and just make up stuff. I've got interesting stocks that I want to share with you, but I need to know what you guys like. So tweet at me, let me know what you like. Make sure you use hashtag #GetTechnical. So we can get a little bit of momentum, so we can bring in more folks to share in on the goodness with us. We are at about 10:29, taking us to the end of the power hour of the morning trading. So hopefully you guys had some good results. Once again, you're welcome for MVIS if you got in on that. More great picks to come. Great work on everyone that entered the competition with identifying their patterns and the picks that they had in there. I saw some great stuff. I've added them to my watch list. So I think we are all learning together and everything is going according to plan. So with that, I'm Neal Hamilton. This has been Get Technical featuring special guests, the Voz. Next up is the Benzinga Pro Happy Hour with Ryan Faluna. Have a great day, everyone.